Hi Matrix, welcome to the Durban Online Academy channel. In this video, we will be looking at a fixed asset note question from the June 2024 Gauteng Province exam paper. In 1.2 Jonty Limited, it states that the following information relates to Jonty Limited. The financial year ends on the 29th of February 2024. Under the required 1.2.1, it states that we must refer to information C. For 10 marks, we are required to calculate the missing amounts denoted by 1 to 4 on the fixed asset note. So let's have a look at information C. In information C, we are given the fixed asset note and some additional information. We are told that land and buildings were purchased during the financial year for 1,500,000 rands. This has been properly recorded. If we look under land and buildings in the fixed asset note, we can confirm that additions of 1,500,000 rands have been recorded. Depreciation on vehicles is calculated at 20% per annum on the diminishing balance method. The total depreciation for the financial year amounted to 83,200 rands. As you can see, under the vehicles assets class, depreciation of 83,200 rands has been recorded. On 29 February 2024, a vehicle costing 200,000 rands was sold for cash for 118,000 rands, right? So that's the consideration we received, or the proceeds we received. The business made a loss of 10,000 rands on the sale of the asset. If we look under the vehicles asset class, we can see that indeed there's a disposal that occurred, but the value is not given to us. So the value of the asset at the date of disposal is not given to us, so we will have to calculate that value. Depreciation on equipment is calculated at 15% per annum on the cost price. The company decided to invest in new equipment since the equipment was very old. The new equipment was bought on 1 November 2023 at a total cost of 150,000 rands. If we look under the equipment asset class, we can confirm that additions of 150,000 rands took place during the year, and we can also see that depreciation figure is missing, so we will have to calculate the depreciation figure. So let's have a look at missing amount number 1. Here we are required to determine the cost at the beginning of the year for land and buildings. By looking at the structure of the fixed asset note, there are 2 equations we can use to determine the cost at the beginning of the year. The first one is cost at the beginning of the year minus accumulated depreciation equals to the carrying value at the beginning of the year. Since we are looking for the cost at the beginning of the year, we must make that the subject of the formula by taking the accumulated depreciation at the beginning of the year to the other side of the equation. When you take the accumulated depreciation at the beginning of the year to the other side of the equation, it changes from minus accumulated depreciation at the beginning of the year to plus accumulated depreciation at the beginning of the year. So that gives us cost at the beginning of the year equals to carrying value at the beginning of the year plus accumulated depreciation at the beginning of the year. When we look at the fixed asset note and the additional information provided to us, Do we have a value for the carrying value at the beginning of the year for land and buildings? No. Do we have a value for accumulated depreciation at the beginning of the year for land and buildings? No. So it then follows that we can't use this formula to determine the cost at the beginning of the year because we just don't have enough information. But it's important for you to be aware of this equation in case the question you receive in the exam does have the information and you can use this equation. The second equation we can use is the cost at the beginning of the year plus additions at cost minus disposal at cost equals to the cost at the end of the year. The second equation is the cost at the beginning of the year plus additions at cost minus disposals at cost equals to the cost at the end of the year. Since we are looking for the cost at the beginning of the year, we must make that the subject of the formula by taking everything else to the other side of the equation. When you take a value to the other side of the equation, the sign before the value changes. So if it was positive, it becomes negative, and if it was negative, it becomes positive. So that gives us cost at the beginning of the year is equal to the cost at the end of the year minus additions at cost plus disposals at cost. Now let's fill in the values of the equation. Do we have a value for cost at the end of the year? Yes, we do. The fixed assets note shows us that the cost at the end of the year is 7,890,720 rands. Do we have a value for additions at cost? Yes, we do. In the fixed assets note, we can see that additions at cost is 1,500,000 rands. Do we have a value for disposals at cost? No. The fixed asset note will not give us that value because it only shows the carrying value at the date of disposal. We can only get the cost of any land and buildings disposed in the additional information if anything at all is given. When we look at our additional information, there is no mention of any land and buildings that were disposed, so we can assume that there were no disposals of land and buildings during the year. So that means the disposal at cost figure is going to be 0. Cost at the beginning of the year is equal to 7,890,720 rands minus 1,500,000 rands plus 0 equals to 6,390,720 rands. Remember that you must show your workings so that if you get the final answer wrong, you can still get marks for the correct components of your workings. Missing amount number 2 requires us to calculate the disposal at carrying value for vehicles. So here we want to determine the carrying value at the date of disposal of any vehicles that were disposed by the company during the current financial year. There are two equations we can use to determine this value. The first is carrying value at the beginning of the year plus additions at cost minus disposals at carrying value minus depreciation equals to the carrying value at the end of the year. So let's write it out. Carrying value at the beginning of the year plus additions at cost minus disposals at carrying value minus depreciation equals to the carrying value at the end of the year. We are looking for the disposals at carrying value figure, so we will isolate that and make that the subject of the formula by sending it to the other side of the equation. Since the carrying value at the end of the year is also on the other side of the equation, we have to take it to the other side of the equation so that we have the disposal at carrying value by itself as the subject of the formula. That will give us the equation disposal at carrying value equals to carrying value at the beginning of the year plus additions at cost minus depreciation minus carrying value at the end of the year. The carrying value at the beginning of the year is given to us as 416,000 rands. Additions at cost is given to us as 0. Depreciation is given to us as 83,200 rands. The carrying value at the end of the year is not given to us, but we can calculate it because we know that the carrying value at the end of the year is equal to the cost at the end of the year minus the accumulated depreciation at the end of the year. So that will be the cost at the end of the year, which is 452,000 rands minus accumulated depreciation at the end of the year, which is 247,200 rands. And that gives us the carrying value at the end of the year of 204,800 rands. So now if you write out the equation, we have disposals at carrying value equals to 416,000 rands plus 0 minus 83,200 rands minus 204,800 rands. This gives us an answer of 128,000 rands. So in our answer book, we will write 416,000 rands minus 83,200 rands minus 204,800 rands equals to 128,000 rands. The second equation we can use to calculate the disposal at carrying value is profit or loss on disposal equals to proceeds minus disposal at carrying value. We are looking for disposal at carrying value figure, but since it is negative, we must first take it to the other side of the equation to make it positive. We must also take the profit or loss on disposal to the other side of the equation to ensure that the disposal at carrying value figure is isolated by itself and it's the subject of the formula. When we do that, we get the equation disposal at carrying value equals to proceeds minus profit or loss on disposal. Our proceeds is given as 118,000 rands. We have a loss on disposal of 10,000 rands. We can now write the equation as disposal at carrying value is equal to 118,000 rands minus, and in brackets we put in minus 10,000 rands. The reason why we put negative 10,000 rands in brackets is because we have a loss on disposal, so we have to show that amount as a negative. This gives us an answer of 128,000 rands. So in our answer book, we will write 118,000 rands minus negative 10,000 rands equals to 128,000 rands. For missing amount number 3, we are required to determine the carrying value at the end of the year for the vehicle's asset class. The equation to use here is carrying value at the end of the year is equal to cost at the end of the year minus accumulated depreciation at the end of the year. We've already determined that the cost at the end of the year is 452,000 rands, and the accumulated depreciation at the end of the year is 247,200. So our carrying value at the end of the year is 452,000 minus 247,200 rands. And this gives us a carrying value at the end of the year of 204,800 rands. For missing amount number 4, we are required to calculate the depreciation for the equipment asset class. In the additional information, we are told that the company acquired new equipment. There is no mention of any equipment that was disposed. That means the company has 2 types of equipment. It has old equipment, which is equipment that was in our records since the beginning of the year, and new equipment, which is equipment which was purchased during the current financial year. We must calculate the depreciation on the old equipment separately from the depreciation on the new equipment, and then we must add the 2 amounts together to get the total for depreciation on vehicles. Let's start with the depreciation on the old equipment. We are told that depreciation on equipment is calculated at 15% per annum on the cost price method. So let's write out the equation for depreciation on old assets using the cost price method. The equation is depreciation equals to cost price multiplied by the depreciation percentage or the depreciation rate. And this is limited to the carrying value at the beginning of the year minus 1. The reason why we say limited to the carrying value at the beginning of the year minus 1 is because our depreciation for the year is limited to the carrying value at the beginning of the year. You cannot depreciate an asset for more than its carrying value. The -1 is because even if an asset has been fully depreciated, it must still be carried in our books at a carrying value of R1, unless the asset is completely scrapped off from our books or if the asset is disposed of. Therefore, the depreciation will always be a maximum of the carrying value at the beginning of the year -1. So let's fill out the values in our equation. The cost of the old equipment is given to us as 790,000 rands. The depreciation rate is 15% per annum, and this is limited to the carrying value at the beginning of the year, which is equal to the cost at the beginning of the year minus accumulated depreciation at the beginning of the year. So the cost is 790,000 rands minus the accumulated depreciation at the beginning of the year, which is 710,000 rands. And this gives us a carrying value at the beginning of the year of 80,000 rands. So when we fill in the values of our equation, we have depreciation is equal to 790,000 rands multiplied by the depreciation rate of 15%, but limited to the value of 80,000 rands -1. This then becomes depreciation is equal to 118,500 rands, because 790,000 times 15% is equal to 118,500 rands. But this is limited to 79,999 rands, because 80,000 rands minus 1 rand is equal to 79,999 rands. Therefore, our final depreciation figure is going to be 79,999 rands, because that's the maximum depreciation we can charge to this asset. Now let's look at the depreciation for the new equipment. The equation for the new equipment is going to be depreciation equals to cost price multiplied by the depreciation percent or the depreciation rate multiplied by n over 12. Notice that there's no limit to the carrying value at the beginning of the year when we are doing the depreciation on the new equipment. This is because the asset was purchased during the year, so there's no carrying value at the beginning of the year. The N is the number of months for which the asset has been in our books since it was purchased in the current financial year. Our cost price is given as 150,000 rands. The depreciation rate is 15%. The equipment was purchased on 1 November 2023, so that means it's been in our books for 4 months, from the 1st of November, December, January, and up until the end of February. So that's 4 months. So when we fill in the values of our equation, we have depreciation is equal to 150,000 rands cost price multiplied by 15% depreciation rate multiplied by 4 months over 12 months. This gives us a depreciation figure of 7,500 rands. Therefore, the total depreciation on equipment for the current financial year is going to be the 79,999 rands for the old equipment plus the 7,500 rands for the new equipment. This gives us a total depreciation amount of 87,499 rands. So there you have it, matrix. If you need more help with the fixed asset note, don't hesitate to get in touch with us using the contact details displayed on the screen. The sooner you get in touch with us, the better.